Perfect. My name is Jeff Scott, and welcome to what's really unusual for me, which is an afternoon-based program. I had a lot of people sign up for this, probably more people than I've had in a long time. So the good news is, or bad news is, depending on your point of view, is I don't really have a stop time. So this will probably go on 75 to 120 minutes. It will be recorded. I have a couple of polling questions, but I'll probably wait a few minutes to put those up there. I'll give you my background as we get going, and I certainly appreciate you being here. There's probably two communities of traders here. I suspect there'll be more people from the HGSI board, especially after the controversies I caused on Thursday, apparently. I never saw so much activity. And the funny thing is, some of the folks that were perhaps contrarians all ended up buying the product, which is sort of funny, actually. The other community would be folks that got invited from John Person, who's well familiar with him. I will do more than I did on Thursday night. I want to look at the market. I want to show the folks from John Person's group how I do things. And if you just type a yes in, if you can see the slide and hear my voice. Good, thanks. I thought so. Oh boy, Sagar, welcome from Thailand. So nice to see you. I want you next for an add-on, Sagar. So something to think about. So I will spend a little bit more time on program things than I did last time. I think that this is just a great marriage, and frankly, I think John does too. Although those that know John, it took me a while to get him to see the light. Not to say he's stubborn or anything. So let's go ahead and get started. I call today prospecting for great stocks because that's what I like to do. I like to make money. I think we all like to make money. This is not about futures. It's not about Forex. It's not about commodities. It's about underlying stocks. Now, whether or not you trade options or other derivatives of the stocks, that's fine with me. I do. But for me, it starts with finding stocks that have high, reliable signals in the direction I want. And then for those that are coming from HGSI world or from John Person's camp, we've launched John's indicators as an add-on for HGSI, which it's actually a lower place of entry for John's stuff. And it's really HGSI, as you'll see, is a very powerful program for a very fair little cost. I'll start with a disclaimer. This session is for educational purposes only. If I recommend a stock, it's purely in the spirit of education and should not be considered investment advice. By training, I am a physician. Most physicians lose money with their investments. I started by losing money. I remember when I went into my first practice, I sat in the dining room. When you go into practice, you usually have a fair amount of debt, and they have a doctor's lounge with free food. So nothing wrong with free food. And I would sit there and it'd be the most expensive free food I ever had because I was very impressionable and everybody thought they knew something about stocks or their brother-in-law was a broker. And after blowing up accounts, I decided it was time to learn. And I started by reading. The first book I read is How to Make Money in Stocks. May or may not be a relevant book today by William O'Neill, but I do a lot of mentoring. And I make, to prove that people are serious, I won't talk to them until they've read the book because I do think it's a good foundation in stock trading. John's got some great books, which I'll mention later on. I am independent. I don't make a penny. Let me say that again. I do not make a penny if somebody buys HGSI or John's add-ons. I'm doing this as a unpaid volunteer. I am friends with the proprietor of both Person's Planet, John and Mary, and HGSI, but I am not getting paid, and I have paid for the tools that I use. That's important to me because when I tell you I like something, I'm not being paid to tell you good things about it. In addition, what people don't realize is often when one guru invites you to hear another guru, note, I'm not saying I'm a guru, the referring guru gets a percentage of your sales. I get nothing, so I'm not incentivized financially to say anything. Trading involves risk. You and your owner are solely responsible. And again, just based upon some of the fires I had to put out overnight on the HGSI board on Thursday night and Friday, I have no financial relationship with highgrowthstock.com or Person's Planet. I don't set prices nor policies. Now, I'm also the first person who likes to call out the folks that really impacted on his trading or their trading, me. In the chat room, if you scroll up, you're going to see a link for Ian, a Ian video. And if not, you'll see I'll send the links out when I send out the recording. This is Ian Woodward. Ian Woodward was a genius. He also had the most incredible way of presenting. He had a great English accent. He made up a lot of funny words, hence why the other two links were a document on our vocabulary and then a movie where I explain everything. As I said, I started with O'Neill. Cancelim was my background. Stocks with earnings, something new, good leadership in their group, etc. Morales and Katcher, who I'm friends with. Chris Katcher is a true rocket scientist. He actually worked and participated in the naming of 3 things on the periodic table. He's a concert pianist. It's scary how brilliant he is. And Gil, who's the other half of Morales and Katcher. These are also a good friend of mine, also a smart guy, the proponents of the Bible gap ups and the pocket pivots that I use. And they're defined, for those that don't know them, in the documents I shared with you. Ron Brown, like myself, was a follower of Ian. Ron had the fun, frankly, and if there's anything I'm jealous of Ron, I'm jealous of the fact he got to be Ian's partner and work almost every day with Ian for a number of years. Ron uses HGSI. If there's 5 people that are power users and give back to the audience, he's up there with 1 or 2, number 1 or number 2. He's gone very heavy into volume spread analysis. And just one of the neat things about HGSI, when things are not proprietary and the IP has been published and therefore in the public domain, George, the proprietor of HGSI, puts it into the program. So the entire volume spread implementation that you might pay for other people is in HGSI. On the left, just very quickly, is George Lee. He's a trading friend of mine. We do a number of live meetings. I'll come back to that in a few minutes. Van Tharp, it's not just the stock you pick, the strike price, the option. It's how many do you buy? Where do you set your stops? What's your targets? And I learned that first from Van Tharp. And really, what I got from John was, on the left, I know what the market's doing, and I have a list of stocks that I might want to buy. And John really taught me when to buy them. As Ian would sing, you got to know when to hold them, and you got to know when to fold them. And I learned a lot of that, frankly, from John. Here are 2 of his books. I liked the Green Book more, but probably only because I'm more of a stock guy. I know that the book on the right, I believe, is being updated as we speak and will be coming out again. Sager down here, I won't say much about him during the presentation because I don't want to bring in too many different things, but I already alluded, he's my target for the next Guru add-on for HGSI. Sagar and his friends and colleagues have developed some unique and I find very useful indicators, but I don't want to confuse people today. If I showed you my desktop, which I will not, you would see I have every program ever made. I have a fair amount of cash, and I have a very forgiving wife, but she has no idea how much I've wasted on software programs. I buy everything I see. I use very few. The reason TradeStation, Thinkorswim, or Genesis are listed there is really twofold. One, I have to have a live trading platform, and 2, I need a way to use John's indicators. Well, now I can add HGSI as a source for those indicators. EdgeRater was another student of Ian, Chris White, and Chris, also with the English accent, started a program to automate some of the things that I had to do in a spreadsheet. I'll show you a couple of his things as the day goes on. And I don't want to spend much time today, because again, I don't want to confuse, but of all the minutia and things I play with, I'm ending up with a limited list of things that work for me. I've now gone with a guy named Dr. K in seasonality. I think it's called seasonalitytraderpro.com. For the HGSI folks, I don't set his prices either. They're not cheap, but he's got some really cool things for seasonality, which I may talk about. And I mentioned Cigar with his superiorprofit.com. For those that don't know HGSI, and again, I get nothing from your purchases, I just want to show you, this is their URL. They give a free 30-day trial. At the conclusion of today, I will give you out a code. Spoiler alert, the code is my name, Jeff Scott, and that code gets you $100 off if you're a new user. As I found out with one of my friends today, you have to do that before your trial is over to use the code. And under investing strategies, you'll find, now you're probably getting to the point of thousands of videos by Ron, myself, and others. So a little bit about my background, because I'm not John, I'm not Ron, I do things my own way. I've developed my style over several decades. I still work full-time. I'm in the C-suite of a company that has 3,500 employees. Although I'm a physician, I've become more of a serial entrepreneur. And this will be the 4th or 5th company that we've built and sold into the public markets. I don't sit by my computer during the day. I check my accounts on my phone frequently. Boy, do I love the iPhone Toss app. Thank you, TD Ameritrade. And I cheat and make a few trades during the day, but I'm usually busy running a business. On weekends, I do a top-down and bottoms-up approach. I look at over 800 charts, and I have plenty of free time because I'm at that happy place in life where I don't have any kids at home. And my dog only has 3 walks a day, so you'll hear him barking just like you'll hear John's, but it gives me a lot of free time. During the week, I update my data, I look at my existing trades, and I do a very quick top-down review. I don't want to spend an hour. I use a lot of conditional orders because I'm not in the computer during the day. I let my trades work for me. I do buy stops and I have a planned exit strategy. And of course, like anybody else, my biggest wins come from longer held stocks. So John's add-on launched this weekend, really, and it's really a couple of different pieces. First, there's a subscription on an indicator set. That indicator set, you go down here to personsplanet.com, HGSI, and you buy that. If you have to have HGSI, obviously, to use the program. So when you update your HGSI, you'll get those activated once you've paid for them. And then I will send you scans, warehouse views, and smart groups. And the folks from personsplanet.com that have no idea what I just said will learn that in the next few minutes. I offer a series of educational live web sessions where I'll show you how I use HGSI and the person indicator set to drive market beating returns. So I want to say a couple comments about that. I've been doing free, meaning unpaid, uncharged webinars every week. Let's see if I can point that out, for a long time. I mean, years. And that's the wrong one, figures. And I will continue to do my weekly videos. I have a small but relatively vocal following. I've got maybe after today I'll have 500 subscribers. Not that I care less. I just do this because I like to do it. And you can see I do videos every week. Now, these are usually about an hour long. I don't charge for them. And let me change that. I don't know if John's on this. He had the link, but I think John's out fishing, getting me some dinner maybe. Yeah, we have the advantage over so-called gurus. John has a brand. John is going to use his stuff. He's going to develop new stuff to make him better. And the reason why I couldn't get him excited in HGSI for years was he didn't have his stuff on HGSI. Well, the world is different now. I've got it in HGSI. But more important, we have our own brand. And you'll see that I combine things from different places to make me more money. Because at the end of the day, it's about making me more money and hopefully making you more money. I welcome you to my videos. If you just look for Jeffrey Scott and stocks, you'll get exposed to them as well. I highly suggest you watch the video of the vocabulary before you even try to understand what I'm saying. I have been asked by a lot of people for some more training, so I am going to be sending out some information, probably not for anybody on this call. A lot of people at work and kids of friends want me to teach them how to trade, so I'm going to do some very basic stuff. I'm requiring them to read and then buy HGSI, and we're going to work together on some basic trading knowledge. And then I will be doing very frequently in the HGSI Pug, I'll be doing programs for the people who are purchased the indicator, whether they came from HGSI or John's Place, I don't care. My goal is for you not to do what I do, which is buy something and occasionally let it sit on your computer and never use. So this is my stock of the year for various reasons. And I want to show you how I have brought in the best of John's stuff, my stuff, and I make money. And I'll show you the proof, which may be the last time of the year my wife lets me show you my balance. But I show people on my videos because you'd be amazed how many people you watch or listen to that don't make money or don't trade. This is something I use in telescan, telechart, whatever it's called, telechart. It's easy for me to give away. I give away things for free all the time that I develop. I don't give away things that people have patented or are selling because that's not fair. So Shopify is a stock that I've wanted for a long time. It's got crazy fundamentals. It's really the power behind e-retailing, not that doesn't use Amazon. And Shopify had a margin issue come up on earnings here, and I've been watching it, and I like buying things in uptrends that pull back and reverse. This yellow on this chart is the 200-day moving average. One of the things that Ian taught us was a thing called the high jump bar, and it was how he used mathematics to determine when something was extended to the high side. Well, I can play with math too. Whoops, sorry about that. And I use math, and I figured out when something's extended to the downside. So when I start to cross this green line down here, I know that this stock has not been oversold this much or extended to the downside this much for at least 1 year. Now, I then quickly run into HGSI, and I will review much of what's here for the newbies as my webinar goes on. And I see a stock that's pulled down to 200. And for those that come from John's land, why would I know that it was time to buy this chart, this stock here? Well, I have a bullish engulfing candle. Great. I had my signal here from the high jump, low jump indicator. That's great. But I also have the Persa market catcher. And I won't call this divergence because John will get mad. It has bullish convergence. So somebody asked me why pick the dates that I picked to take trades. I'm not going to go through all those trades this afternoon, but I look for convergence of different tools. I clearly have bullish convergence. I've got a pullback in an uptrend down to the 200 and a stock that I really wanted to own. And it was 285 or so, 290 when I bought it. And the stock got up to 598. And by the way, I bought it in November of 19. That's 3 months ago. So that's over a double on a very expensive stock. Oh, by the way, for those that the John Person buy signal came in 2 days later. This is a David Elliott mobile breakout. This is a John Carter squeeze. And I'll tell you about some of these indicators. That this is a pocket pivot for Morales. and I'll define a kahuna later. But somewhere in this 3 to 4 day period of time, and you could have waited till it broke above the 50 or broke above the chandelier stop, I had a roaring buy on a good name, and it paid for a lot of my toys. And I like toys. That same signal fires time and time again. Stock in an uptrend, pulling back, in this case, to the 50. Person market catcher showing bullish convergence. And then I start looking for my signals to line up. And here you got it. A squeeze, a mobile breakout, a kahuna followed by a pocket pivot, and person's buy signal. It's hard to see them the way I've done them on these charts. As I'll show you, there's different ways of doing them. But this band here is the person buy signal turned green. So not a bad place to buy it. So before I go forward and I start going and look at charts in real life, I just wanted to put these links here again. It's really https tinyurl.com. One is Ian-video. One is HGSI-words-movie. And one's HGSI Word-PDF. So that will give you a taste of Ian, something that I've had sitting on my computer that I've wanted to share for a long time. I figured, what the heck? It's honoring the memory of a legend. And then the two other pieces are to help you understand what I'm saying. Now, a lot of folks will come to me and say, I watch your videos, I see your balances, you make it look so easy. And my answer is, it's rinse, wash, repeat. I do the same thing over and over and over again. It might not be as easy as it looks, but it's not rocket science. It takes education, commitment, and the right tools. I've been doing this for 30 years, have read every book I could find on Amazon about trading, and I have spent hundreds on continuing education. Oh, goodness gracious. Oh, somebody's too late to give them, asking me to get in on the webinar. Sorry about that. I can't do it now. Now, here is, one of the things I should say, even before I show you the slide, one of the things that I got permission from Ian was to use his slides. So when you see a white slide with these 3 triangles in the upper left-hand corner, it's not my slide. It's also old. It's from Ian. But sometimes what's old doesn't really change and it's still good. So this came from Ian, and it defines my style of trading, which is top down. I start with looking at the markets, then I want to find the best industry groups, and then within those industry groups, I want to find the best stocks. Clearly, John Person's indicators can help me with each of those 3 steps. And as I hope to show you over the next period of time, there's no better tool for ferreting out top-down investing than HGSI, especially now with the power of John's tools. So before I go any further, I've got a poll. 5 questions or so, simple. All right, that's not how I want to do that. All right, I did it wrong. Relaunch polling. Continue. So do you see the poll where you can vote? All right, please go ahead and vote on the poll. Let's see if we can't do this. There should be 5 questions. I don't know how it shows on your computer. Clearly, it's not looking right on mine, but maybe there's a place for you to answer them. Given nothing until a minute and a half. I only see 1% voted. So, all right, you're voting now. Good, good, good. Keep going. Now I'm getting excited. And by the way, this is anonymous. I don't know who's voting, so please vote. There's no trick questions. And whenever I learn from your votes, it allows me to impact on content. Now that I can see how many of you have voted, I'm going to wait until I get up to the mid 40s before I stop the polling. And again, as I mentioned, this is anonymous. It's actually, for me, these are important questions, although they're not very difficult questions. Come on, stragglers. All right, I'm gonna give it 15 more seconds. At 2:20, I'm gonna stop. All right. All right, so I'm gonna end the polling now. I got 40. All right, so let's see what we got. Sharing poll results. I hope you can see this. Oh, you had to have an answer to submit. Should have had none of the above. Okay. So, are you a current customer of HGSI? 50-50. That's awesome, because the reason we did this, as I told the HGSI folks, is I want to expand the market of HGSI. So the fact that half the people are not from HGSI makes me very happy. This platform is for stocks. What best defines your trading style? I swing to position, so that would be 33, 58 of you. Yep. You know, if you're a day trader and you close your positions at the end of the day, there's still value here. But obviously, you're going to look at this and say, you know, I can do, you know, from a day trading perspective, I need TradeStation. Would you be willing to come to Palm Beach in late June? Yeah, so there is a very high likelihood that either the last weekend of June or in early July that I'm going to do a 2 or 3 day seminar. You know, I can assure you that I usually have happy customers. If anything, I have fat customers, because we'll go out the night before for a big steak dinner, and I feed you well for breakfast, lunch, and depending upon the venue, if it's in a weird place, dinner as well. I've enjoyed doing those meetings, and I'm going to, yeah, fat and happy. That's right. And I'm going to plan on doing one this year as well. How did you find out about today? And about half are going to probably come from besides HGSI, which is awesome. Do you use John's indicators? I should have had a none of the above. And, you know, when I do this, I think my big job is to convince you that there's a step here above toss, and there is, and I'll show you why as we go. Well, thank you for that. And let me close that down. So, stock patterns are cyclical. I don't care what time frame you're in. I don't care if it's a stock, ETF, mutual fund, Forex, commodity. Everything does this over and over again. Now, it isn't usually so obvious. Typically, you get another move up and a down and up, and you go into your uptrend by repeating this over and over again. It's really great to find a stock at the green circle, but good, you know, that doesn't happen all the time. It's also nice to find the right time to short. Typically, there's a lot of uncertainty, and it almost seems that the last 2 years have been just as you think the market's rolling over, it gets another leg up. So I spend a lot of time, and how I trade really depends upon where we are in the market. And every week, I actually take risk, and I actually tell you where I think I am in the market and how I'm going to play it. I long for these times. We just got through with it. Maybe it's going to keep going. I'm a bull at heart, and between December, January, and February, I bet my portfolio, which is I trade a 7-figure trading account that I use for demo purposes, but it's real money. It's probably up 70 or 80% since Thanksgiving. Why? Because we've been living in this crazy run-up. probably not so easy anymore, but we'll see. One thing I use EdgeRater for is this thing called the Hindenburg Omen. And John will laugh me off the planet. So I'm just letting you, the John folks know, this is sort of folklore, but the Hindenburg Omen occurs typically at a top when the professional sellers are running for the exits, and us, the small guys, are buying everything in sight. You see a lot of new highs, new lows. The averages can keep going up, but you know it when you get it because the markets just feel like something's wrong. Well, using math, you can quantify this. And if I have time, I'll go show you what 2007 and 8 look like. When I see one of these, I ignore it. And it's the red thing where my arrow is. When I see a series of Hindenburg omens firing, I'm concerned that the market is due for a pullback. Now, the math is not that good. The math says that if I look at a single Hindi, there's a 1 out of 4 chance that I'll get a big pullback. But if I look at the other way around, going back since the 30s, there's not been a major pullback in the US stock markets that wasn't preceded by 1 or more Hindenburgs. Typically, you see a few-day pullback, but the mothers of all pullbacks usually are associated with the Hindenburg Omen. I like to look at surrogate indexes. One of the things I can do in HGSI is I can put together an index of components. Well, everybody's been talking about the canaries for years. I put together my extended canary list, and of course, Priceline is now called Booking. I changed that in the index. And my comment here on Sunday was new highs ahead. We're at a new closing high or just below a new closing high on the canaries. That is, to me, very bullish. Now, of course, the naysayers will tell you, but the rest of the markets are not participating. Well, I'll say bunk to that, because here is what's I learned from Ian decades ago. And what Ian taught me decades ago, said, Jeff, when the market's going up every day and people are starting to say that maybe it's different this time, it's never different. And that I should make an index of the leading stocks at a given time. And here are the stocks that I came up with on the weekend of January 19th. And I published this on my video. And when that index rolls over, when your leaders roll over, that's probably the time to start worrying about getting out of the market. So I do this every time there's a top, and they have saved my bacon more than once. And what do I see on the E-index that I did a month ago? All-time highs. So that index, which has stayed up, has told me to stay long. Ian learned how to trade from William O'Neill. So it better sound like O'Neill's strategy. Market, 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 market. Now, of course, we had a pullback here at the end of January, but it stayed pretty much above the 50-day moving average. And notice we had this little red line here. That's that Hindenburg Omen. I actually got it on my charts. So I think that weekend I put something like down but not out yet. And it bounced, and I'm glad I stayed long. Now, the other thing that's super important, and I call out every weekend when I do my webinars, is you've got to know the news and you got to know when you have earnings. Because I'm a stock trader. I know the first thing that's going to impact my portfolio tomorrow is what the futures are. But I've also seen over the last couple of months that a lot of times the futures move a lot one way overnight, and by the next day, they've recovered and go the other way. But the market's going to make a difference. If Powell is speaking, that might make a difference, although he's learned how to manage the markets much more than when in the beginning of his tenure. But there's no question that earnings matter. And that's my quote in the lower right. Other people have probably said the same thing. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. This little picture comes to me on Twitter from earningswhispers.com. And it actually, they update it every day. It's great because the leading stocks are there and I know what I have to worry about. So I concluded this week's market review, and I'm going to go into charts in a second. This wasn't intended to be an all-day PowerPoint. I said the market continues to climb a wall of worry despite escalating fears on coronavirus and continued U.S. political discord. Go check my video 2 weeks ago. I said ignore coronavirus for now. I said why too. You know, we got I hate Siri sometimes. That was Siri. You know, we've had 1,000 people worldwide die of coronavirus. That's a horrible thing. You got 17,000 Americans have died of influenza A this year. I'll take influenza A as a bigger health risk right now than coronavirus. And yet you're not seeing that on TV, are you? Even again this weekend, Chinese government has stepped in with more economic stimulus to mitigate the effect. This week, small stocks led, NASDAQ up 2.2, Russell up 1.8. Both the S&P and the Dow are up closer to 1. These are the performance to date. 8.5 on the NASDAQ, 4.6 on the S&P. That's a pretty amazing January and almost all of February, isn't it? Here's my model. This is not a model. It's my real portfolio. I started with 1.7 plus my taxes. I took my taxes out on January 15th. I'm up $687,000 on that portfolio since January 1st, which is a 39.8% return. As I looked at the stocks this weekend, many of the leaders looked extended from here and fewer great setups on remainers, laggards. So the ones that look good are laggards. So we're either going to have to chase here, be selective, or wait for the market to come back and give us better opportunities. I think the market's likely to continue to inch forward with earnings season, being a catalyst for movement on individual names. I remain long. I get this return with lots of protection. I've got puts on my biggest winners. I sell out of the money puts and out of the money calls to pay them. And then we learned from Ian not to play chutes and ladders. Now, Ian called it snakes and ladders. What are chutes and ladders? Chutes and ladders is that game you played as a kid. When you hit the ladder, you went up to a bigger number and you're about to beat your sister, your brother, your friend. But if you hit the snake or you hit the chute in America, you went back down to the beginning. You don't want to do that with your money. You want to protect your nest egg. And as the market approaches the top, as we start to see Hindenburg omens, it doesn't mean you have to stop being long. You just got to be careful. So, as I said, this probably I'll come back to that the last time I'm going to share this year, but I'm not making this shit up, okay? And I can't stand listening to people talk about how to be a great trader and how to make money, and they don't even trade. And you look at their platform, and their platform, actually 678,000 is a simulated platform. That's my P&L year to date. And whoops, I spend a lot of money, but that's my remaining equity is a little bit over 2 million. So if you do the math, I started at the 1.7. You can figure out what that means. Now let me figure out how to get rid of that thing because we really don't need to see that. Oh, don't tell me where. Here it is. There you go. So we'll come back to Thinkorswim later. And I want to emphasize something. I get that return with one, protection. I went into this weekend with puts on my Apple, puts on my Amazon, puts on my Bank of America, which are my 3 biggest positions. I'm still holding on to some gold, although it hasn't been doing me any favors. And I'm in and out of volatility instruments. Why? Because I'm okay if I drop down 10%. I don't want to go back to zero. So I'm willing to pay money. I've got that return despite using a lot of protection. So now let's get into the fun stuff. So from the folks who join us from Person's World and other things, this is HGSI. Doesn't look like much, does it? I've been asking him for a decade to change his user interface. But let me tell you, if you take a Ferrari and you beat the shit out of it. You break the windows, you kick in the doors. It still drives like a Ferrari. This one is a Ferrari that looks like a Chevy Vega. No disrespect to Chevrolet. Inside HGSI, and just a note for non-HGSI users. I mentioned before that I'm going to be doing some educational programs. There's 3 sets that I'm doing. One set of education, which will be nighttime webinars that I record. Some I'll just record and put up there, will be teaching beginners how to trade. That's for nobody on this call. All right. The second educational program that I'm doing is to teach non-HGSIers how to use HGSI. That's a lot of you on this call. So if you end up going with the package at this time or in the future, you'll get invited to a series of how to use HGSI and make the most out of it. That package will be, those videos will be put up for everybody to watch. I like to limit the live numbers because that way it can interact. And the third educational program is for both sides of the fence who get persons indicators for HGSI, is how I implemented them in HGSI and how I make money. More about that later. So HGSI, and this is good review for the HGSIers, under designer is, I think of this as a filing cabinet. That filing cabinet has 4 different groups. It has the reference groups. So it's automatically done for you. Not only are what are the components of the major indexes and the minor indexes, but I gotta turn off my filter here, but also what are the components of the various ETFs in the marketplace. So if you're an ETF investor, it might be interesting to know what ETF, what are the components of your various ETFs. This is managed with splits and everything else automatically by the program. Clearly, all the stocks that might be in the Amex, NASDAQ, NYSE, all securities, gives me everything in the database, which is 8,895. And then it has all the industry groups. What are the different stocks? I've heard a rumor that he'll be moving at some point to a different provider, which will make everybody happy. But I'm not going to tell you who that provider is because I didn't get permission to do that. He being George, the proprietor of HGSI. If you want to know what's in the major market index components. So this is, you don't do anything with this except copy things to other groups. But if you're a top-down investor, it starts with knowing the market and the industry groups. Custom groups. I'll come to that in a second. There are a number of smart groups. The smart groups are what are done for you. Every time you click update, you'll pick this up, and we'll talk about this at a later date. And when you hit start, you will update the most recent price, and you will get current updates for the smart groups, which I will show you in a few minutes. Under intraday, you can enable intraday quotes. You can pick Thinkorswim, IEX Cloud, or Alpha Vantage. I don't think Alpha Vantage works. I use Thinkorswim, but I have to have Thinkorswim open, which you can see. I do. Someone just said, I've been using for a while, just starting now to learn how to get to the deeper parts. Big learning curve, good program though. I agree with every word there. It has got a learning curve. I'm here to help. And if you think I'm a bunch of fluff on that, just ask any of the HGSI users. I've been helping, as has Ron and others, for years. If I'm doing it with an intraday update, I have to check that. But since it's the weekend still, it doesn't matter. The smart groups are some top stock lists that have been put together, at least how to scan for them, have been put together by a number of power users. I'm one, so I might want stocks that have big volume. So I run this during the day, tells me what stocks are moving. I'm a pullback guy who wants momentum. These are the stocks there. Or how about stocks that are about to reverse that have been squeezing? So you'll learn about these as we go, but including we've added to this is now John Person Smart Groups. I'm actually doing these as well. I've got bullish. If you're a TradeStation user, how would you like your TradeStation buy 1, 2, 3, 4 HCDs and LCDs to be done for you every time you do the update? And the complete update, all kits, caboodles, flashes, is about 8 minutes. That's a whole lot faster than the TradeStation scanner. So I'm running this, and this will give me updates during the day whenever I run the update. So I have a number of whom I consider smart people who we have built into here. Now, for those that have bought the add-on that have said, Jeff, I can't get this to work, I'm not finding this, let me show you just to make sure you do something. Person indicator teaching. That's not the one I'm looking for. You have to unzip the Smart Group add-on and you see an application. This does not come into the program with install add-ons. This is a double click and run. I don't want to run it now or else I'll be detoured. So each of these will run every time. Now here's a hypothesis. If a stock if you have 30 scans, here's my hypothesis. If you have 30 scans and they're all for bullish stocks, if I told you that one stock was in 29 scans, would you think that stock might be a bullish stock? I would. So imagine, not only do I give you, or does a program give you, and you can select which of these to use, and each of these will get a lot of different scans and stocks done for you. Not only does that happen, you got this thing here called custom groups. And under custom groups, they look at every one of those scans and they count up how many times a stock is in each scan, and then the top 50 stocks end up in a custom list. If a scan identifies bullish stocks that you might want to look at trading, I give you the fact that if it shows up on a lot of scans, I really want to look at it. We'll come back to this later. That's the custom groups. The smart groups I've mentioned, and then the user groups are what you play with. So I bring things down, I create my own, and these may not be updated except for price. It depends on how you set your settings. So I typically will build a buy list every week, and then I'll put this buy list into other programs, but we'll go there in a bit. The second thing that I want to show you on HGSI, and I'm just pulling up a group here of I call Major Markets Plus. This is from Ron Brown, and it is 26 different stocks or ETFs. And I want to put go up here. All right. I'm ranking them, and this is something you'll have to learn. It's very few things that I do to get this thing to work. This is ranking by price and volume. I know there's 26, so I want to pull it down so we can see all of them. What I'm doing here as part of my top-down analysis is I'm saying, let's take the major markets. So we've got the major indexes. We've got the major commodities, gold, silver, oil, gasoline. We've got some sub-indexes, semiconductors, biotech. And let's see, by running this tool, and the raw combo ranks them, where was the money going this week? You rate one-day performance the highest, the way this is set up, then 5 days, and then a little bit of 2 or 3 weeks. Why do I do this? Because I now know that small and mid caps were leading as the week ended last week. 2.3%, 2.2% up. Oil surprisingly had a good week. Gold, now this is something that I've been scratching my head on. Gold was strong. Gold miners, not so strong. Maybe that changes. But it gives me a sense of how the market's running. I always look at the big indexes. So when I double click on the S&P 500, I pull up a chart. Now, I'm not John person. I love John. He's a good friend. But I use my own charts. But this comes with support, resistance, LCCs, all the things that the John person users are used to. I'm going to change that. And to the folks that have already bought the program, I sent out my charts last night or this morning, depending upon when you bought it. So this is where I like to do my work. I've got a daily chart, and then I have a weekly chart. So I'm going to open up the weekly chart as well. Today can't be in-depth teaching because I'll never get done. But if you can't tell that I like to teach, then I don't know what you ate for breakfast, because I love to teach and I do it all the time. In fact, my businesses have a big education of physicians components in it. So on the top of my charts, and it doesn't do you any good on an index, it'll basically show you revenue and earnings for 8 quarters, a graph of earnings and revenue, tells me what group I'm in, and a little bit about some of the fundamental scores. As I go down here, I can find out more. I can find out issues about market cap. Again, this is an index. More about earnings. So right now, I'm not going to get you a whole lot of stuff because it's an index. So I'm not going to spend much time there right now. These are some of my custom indicators, all of which are built into HGSI, except for John's, which are now in there. For the folks that come from John's world, I've got the person buy-sell indicator a little bit bigger here, which is this green B that you should be able to see. I also have them here. This is an older version of it, so let me change that. And I'm going to go into buy-sell, and I have choices. Oops. Yep. I can do a buy-sell arrow, a ribbon, a continuous ribbon, or a simple arrow. I like the continuous ribbon. So I could see when the last buy signal was is when it turned green, which of course matches up with here. This is the person market catcher. So when I'm looking at this index, what can you say? You're at the highest it's been. I can go back as far as I want. It's at a high, all right? One thing you'll see on Ian's video is he says, be ready for 3 scenarios. These are the 3 scenarios that I came up with over the weekend. Remember, I work for a living. I'm not home, and I have to be prepared. We go straight up to the moon. It sure looks like it wants to do that, but I can't count on that. We have a 50-day moving average. We have a 17-day moving average, and we have a 200-day moving average. We haven't touched those in a long run. So my guess is the low road scenario is we go down to the 200. The high road is we just keep going, and the likely road is that we're probably going to bounce around a little bit before we break. We need to consolidate. We need to consolidate like we did over here, like we did over there. That's not to say that this market can't run to the moon. Now, somebody asked me, Jeff, you may like these boxes here that tell you some information. How do I get rid of them? You get rid of them by going into Edit Current View and finding the warehouse indicator. That's where those things are. And all you got to do is delete it. I'm not deleting it because I like it. So we'll go quickly right now. This is the Hindenburg-Omen. The rest are for later. Big uptrend. Do we keep going up? Do we go sideways? Obviously a super strong market. If I go down and look at the Dow Jones Industrials, it'll look exactly the same. So there's no reason to talk about it. If I want to look at the NASDAQ, looks a little bit stronger to me. It hasn't even pulled back at all. No surprise, it was the strongest market last week. Look, we are supposed to go through periods of congestion as we did here and here. We haven't had one in 1,600 NASDAQ points. I can't be the only person that thinks this market is getting right and will probably have a sideways congestion at some point. The weakest and the strongest has been the Russell. The strongest has had a huge move off the pullback, but this one doesn't look like the others. It's made a big improvement of late. The biggest difference, if I drop down on the weeklies, is the Russell has not taken out its 2018 highs. All the others have. So the Russell has had a big move up. Now, one of the cool things about HGSI and other programs is if I connect the bottom to the top, and I could use an arrow, tells me we've gone up 5.5% in 9 days. Pretty big move on the Russell, in my opinion. Now, if I want to go back and I want to look at the dollar is killing some things, killing my gold. The dollar here is on a big move. It's moved up from the lows in December to where it closed-ish, 3% in a month. That's a pretty big move on the dollar. It's a dollar. It's not a growth stock. It's moved up, I'm sure, on coronavirus fears. You could see how much it's moved up on the weekly charts. These are all customizable. You make what white, black, lots of indicators, no indicators. But how many are we going to have the Hindenburg built in? Give you a nice little warning sign. All right, what about gold? We'll go to volatility. Volatility has come down quite a bit. I know why people don't like my boxes, because they get in the way. Yeah, I know. I'm sorry about that. Well, let's just say there's a way of fixing that, but it sort of sticks around. So if I go to I can have extra periods on the chart, so that'll push the start date back some. Maybe not enough. Well, suffice it to say that we can see here on the weekly, the VIX has come down quite a bit. And if I look at gold, surprisingly with the strong dollar, gold has really, I mean, don't need as much there. Despite the strong dollar, gold has been very flat. Now look at this. I had a Mobo breakout, which is David Elliott. I had a squeeze. I had a person buy signal. I had pocket pivots all on gold on Friday. I'm not going to make this up and say that the PMC is getting stronger. It's just getting less negative. Maybe gold is waiting to pop. I don't know what John is saying, but I'm in gold for a reason. As I mentioned, gold miners have underperformed gold. And you can see down here closer to the 50-day moving average. And then silver looks a lot like gold miners. So maybe gold miners are mimicking silver. So the first question in a top-down is, I'm going to ask you the question. At the bottom, you should see some yes, no, go slower, go faster, more. Type yes if you think the market's going to end up this week, and no if you think the market's going lower. See if you can find that place to vote. Oh, you're doing it there. Okay. All right. So we're seeing a lot of everything. So Cigar, who's got some really great indicators, said neutral. I bet the market goes higher. And the only reason I say that is it's hard to stop a moving train. And the Chinese eased again over the weekend, or gave liquidity. And I still think that coronavirus is going to go away on its own. And then when it goes away, we'll have a V-shaped recovery in China. And also we have a US Fed that says nothing in 2020. And they certainly aren't going to raise at the end of the year before an election. But that's just my opinion. I'm prepared for it to go anywhere. So the first part of a top-down investor is, what is the market going to do? Now, for the person, folks, you'll notice some of the things on this chart. And I have something that I like a lot that I think I've convinced some of the HGSI users about, and that's what I call the high jump. And I know when the market gets extended, it has a tendency of coming back. So I marry a lot of different people's stuff into this chart. This is the E-minis. Clearly, we are in a buy signal for the daily, the weekly, and the monthly. And the only thing I want to point out here is this high jump indicator. And that high jump indicator is a measure of extension. And when it says 97.38%, it tells me that this is the 97th percentile of extension that we've had over the last 200 trading bars. If I go and I look at all these bars before we correct, their number is about that 95. The next day it was 81. This doesn't look like it's really high, but it was the highest of all time, 94, 93. Here, the high jump bar was, oops, try that again, 94, and it corrected. We're at 97. We're at a point where the market corrects, but that correction can be just a couple of days of going sideways. It doesn't have to mean a major pullback. So I look at that all the time. A lot of other things there that I share and explain on my smaller group meetings. So part one of HGSI top-down is to look at the market. How about industry groups? Now, I've got something special for the John Person users here. So by highlighting industry groups, and then I hit the warehouse view, I automatically have populated 175 industry groups into this thing here, radar screen, warehouse view. We call it warehouse view. Now, if I right click on any of the industry groups here, change the index group, it gives me all the stocks in the index group. What it gives me also is how many of them, the top two, are trading higher than the index or going up more than the index. Everything else is underperforming its index. And that's an index for the group. Now I'm going to switch this one. In HGSI, I called the John Person indicator the person buy signal or the person signal, sell signal. And I can tell you that I created so that when you run your analysis, you are determining the person buy or sell status on every instrument in that 8,900 that are in all securities. Yes, in 10 minutes or less. And what this tells me in healthcare services, 85% of the stocks are actually in a person buy signal. Doesn't tell me when yet, but they're in a buy. So what I want to be going long, you don't have to answer this, what I want to be going long in a scenario when all the stocks are in a sell in a group. Probably not, but if I start to see stocks flashing me buy signals in that scenario, and I had 7 or 8 buy signals in one day, I'd probably be perplexed. Now, how I rank industry groups is part of my top-down analysis. I decide I don't want to rank them on 1, 5, and 15-day performance. I want to rank them on momentum. So E equals MC squared. I don't have that here. But what I can do is I can use the Elder Force Index. The Elder Force Index says take today's price minus yesterday's price, multiply it by volume, and plot it. And then put a 2-day, 5-day, 13-day, whatever you prefer, exponential average on it and take that value. So what I do, and what I brought to HGSI, I think at one point, was the 2-day force index. So let me get my index views. So 37 of the industry groups have a 2-day force index that is positive. If I am a long investor, I would prefer buying in groups that have a 2-day force that's positive, not negative. If I am a top-down investor, I would like to be buying in those groups that have the most momentum to the upside. Turns out REITs looked really good this weekend. If I right-click on REIT, change the index group, I now see some of the stocks. And I can see in that group how many have a buy signal, or this one, how many have a sell signal. And this is how many went buy on Friday. This is how many went sell on Friday. This is the percentage overall buy, percentage overall sell. Since they're all in the same group, they're all going to have the same answers there. Now, I don't have a really good, I can bring into this, I say good, I don't have a good resolution here, else I'd show you some more stuff. So what I would then do is I would double click on Digital Reality Trust. And again, I'm going to want to put my favorite view or my favorite chart, which is this one. And then I'm going to want to open up a weekly chart, which is this one. Don't get scared away by the indicators. You'll put your own indicators there. And I'm going to want to fix what I did over there before. I want to change this back down to 30, which is just how much space beforehand. I want to give myself a little bit more data. There you go. And I'm going to go flip through these and look for charts that look interesting. As you'll learn on my stuff, blue and green is really good and red is bad. So digital reality, I looked at this, I said, you know, it looks okay. I know from this box, since it's green, it had a weekly high close doji. There it is. There's a doji. I know from this box it has a daily high close doji. I know that the person market catcher is outperforming, which is good. What I didn't like about this chart, which was similar to a lot of them, is it's very close to its prior high. But this was one that I thought looked interesting. I look up here, I see next quarter earnings per share growth, 966%. I look over here, following quarter, 488%. Multiple of 19, and it pays a 3.3% dividend. That looks really good. Down here, 17 new buys, 10 new sells in the index, and overall 72% of the index is in a buy, 27 is in a sell. These are all user customizable. And then this gray thing here is the industry group strength. So strong. So I would go through, one of the things I like is how, I gotta do this, first law of doing this, and I think I screwed it up. I got to go back to the warehouse view, which is here. You have to double click. And when you double click, then the order of what you're going to look at down here, hopefully I hit the wrong thing again. I don't want to look at these in alphabetical order. I want to look at these in the order of the best stocks. So there's the next best stock, Equinox. And I could go through this looking for things that I might want to buy. This was one that interested me, Welltower. Again, it's getting close up to its prior high. Had a buy signal come in here, pocket pivots, kahunas, pays a 3.9% dividend. Sabra REIT, I worked this up on the weekend. Why? Uptrend, pull back to major moving averages. I said green and blue are good. Mobile breakout from a squeeze, a person buy, a pocket pivot in kahuna. And does anybody want to tell me what the PMC is doing? No one's going to tell me. The PMC right here is doing bullish convergence. So yes, it's negative there, but it's clearly improving. I'm not sure if it counts because it's not exactly flat there, but I worked this one up on my Sunday webinar, told people where I was going to buy it, where I was going to put the stop, and I already have an order sitting out there. I am different than John. I know earnings next week. John likes to put his earnings and wait for the stock to, or put his buy stop and hope that the price comes down and hits his buy stop. I can't afford to do that. I'm not watching my computer all day. I put my stop above the high of the day, and if the market goes up, I get filled. If the market's down on the day, nothing usually happens. I would go through this list. Crown Castle, they do the cell phone towers. Cyrus One does the cloud-based servers. A lot of REITs looked good. So I found the REITs to be interesting. Again, I'm more showing you stuff today than looking to teach you how to use this program and how I trade. Now, I would go through typically every weekend, and if you are interested in this, go watch the webinar. I went through, I think, the first 5 to 7 groups, and I looked at their stocks. If I go to force down 2 days, there is only 29 groups, and these would be the groups whose momentum is going the wrong way. Look at semiconductors. They've been leading this market higher, yet on Friday at 7 sells versus 1 buy, and 70% are in a sell signal. I think that's some very useful information. Not John's style of trading. John's more of a quick trader, at least on his webinars. Now, I'm going to shift now from what has been a top-down approach to how the person indicators are helping me do a bottoms-up approach. So, erase your minds, start all over, and now I'm going to go into reference groups, all securities, and hit the warehouse view. I am now going to go into, and everybody that's subscribed will have most of these. I'm already improving them for the next launch. Person daily, all stocks. Okay, I don't think you have that yet. We created it last time. Here are, I put a price and filter in. You may disagree with my price and filter, and that's your business. You can change it. But I've got 2,712 stocks that have a price. Let's look at the filter. I think I may have edit. Price is greater than 250. 50-day moving average volume is greater than 250, and it's not an ETF. So I've now changed this view you're seeing here, and now I got a spreadsheet of 2,712 stocks, and I could tell you if you can't do this in Thinkorswim, and if you do it in TradeStation, if you can get 1,000 in there, you win an award, because you know what it's going to give you. It's going to give you an error signal. But I've got each one I'm measuring for daily buy. The last daily buy doesn't mean it's today's. This column is today's. This is how many days since it went in a buy. Is it in a high close doji or low close doji? Is it a weekly buy? Now, this could also be, to be honest, it's not just buys. Somewhere down here, it's got sells too. Okay? So you can bring up your buys, your sells, your high close dojis, your low close dojis. And the way that this has been written into HGSI, you got it tells you how many in the group are in a buy versus sell and what the status of market catcher is, weakening, improving, lagging. I can also scan on those. So I might start every day and say, all right, I want to know today, which will be using Friday data, how many stocks had a new person buy signal? 123. If this is in the market today and I clicked intraday enabled, update, put that there, turn on intraday, and run my update, in 10 minutes, you're going to have all these signals on every stock in the market. If you're using Thinkorswim, you're going to be on a real-time basis. So I might want to tell you about combo, and then I'll tell you what. The view, which is what we're looking at here, which is basically the warehouse view from TradeStation. And again, my job after you become a member is to teach you how to use this. My unpaid volunteer job, which I've been doing for a long time. The view includes a filter. The filter tells you what the stocks are that made the list. And then how I ranked them. In these cases, I gave a lot of credit for being a daily buy or a daily high close doji. I looked at your momentum, your group is strong, and your market catcher had high relative strength. So there are different ways to do this, and we'll learn how to improve it together. So this is ranked by combo, and these should be very strong stocks. So if I look at Ventas, first thing is it better be in a person buy signal. Let's take a look. I'm going to have to kill that box. I hate to kill that box. Let me just do this real quick. I actually like having those signals there for me. So I'm going to duplicate it. I'm now going to edit the new one, and I'm going to take out the boxes. I'll leave that box. I'm going to take this box out. Delete. Okay. Okay. Disappear. There you go. So I should have a person buy signal, which I do. And then as I look at this, I'm in a mobile breakout from a squeeze. My person buy signal just fired. My person market catcher is clearly becoming less negative. I had a pocket pivot and I had a kahuna. For those that follow me know that I'm probably interested in this stock. I don't like buying things that are down so much, so that's a negative, but they got to reverse from somewhere. Now, I also have TradeStation person, and I call it my market screener. Let's see if I can, my advanced screener. So I took a lot of John's stuff, and I can't remember 2 seconds. This was VTR. So I think I actually put this on one of my, that's on a different list. All right. So let's look at VTR. And unfortunately, I'm using a resolution that's not my standard resolution. So I mentioned Cigars program. That's where I get these auto trend lines for. They're incredibly accurate. I can see that I've got that buy signal here. I had a buy signal back here. These are my signals taken to TradeStation. I give this to all my users. It's got pocket pivots, mobile breakout squeeze, PSAR reversal, kahunas and force, all on a histogram down there, easy to see. It doesn't show well here because it's all scrinched, so I'm not going to go there. But just to show the John's users, so I would look at this and I would be interested and I would be putting that on a buy watch list. The next one, I tell my friends to be careful of pot stocks. This is probably the one pot stock that I'm interested in owning. IIPR. IIPR is a REIT that owns the storage and I think some of the farms. So they're not taking the risk on whose product wins or loses. They're charging rent. It pays a dividend. It has demand supply of 3.3%, so it's under demand. It is a deep pullback, but it's got a new John person buy and a mobile breakout. Its PMC is still outperforming, so I'm okay with that. Reality income, the next one. New person buy signal, it's already ran a lot. I'm going to look for something that's not starting to get extended. Danaher, new base, mobile breakout buy signal, and a kahuna hasn't broken negative on the PMC. Again, I like to buy things that have pulled back that's extended, although not too extended. And here's that Sabra that I already looked at before. So I might do a top-down analysis just by looking at what's in the warehouse. How about person daily buy and improving PMC? So now I'm down to 55. Person daily buy, improving PMC, and a weekly high close doji. Ooh, now I'm rubbing my hands because I know I love this combination. Let's see what this looks like. For those who are not person people that don't know much about high close dojis, let me give you a quick lesson. This isn't one. It's a high close doji in the setting of you have a doji here, a doji there, and then I've got a close that's above the high of the doji. But it's got to be in a downtrend, so I don't pay much attention to this. But I do have a stock that's got a new buy signal. The person market catcher is turned and starting to improve in a squeeze. Okay. Let's see if any of this are actually a good, that doesn't look like anything. You can see an HGSI, and I'm using up a lot of computer horsepower here. It's very fast of looking at charts because I don't have to print them all out. And in fact, I did the cardinal error. I did not double click. I bet, let's look at Carlisle. So again, not really much of a downtrend, and not really in a high closed doji. So I have to go, oh, okay. But here's a stock with a new person buy signal, mobile breakout from a squeeze. We're improving on the PMC. This one looks interesting as well. So I go through various lists. And all right, I wonder if I took let me look at the filter here. The filter controls what's in the list. Weekly high closed doji, yes. People remember I didn't send these out yet because I haven't had a chance to proof them all. They'll get done in the next couple of days. You've got the basic ones. Come on, do your stuff. If you have questions, please type them into the chat bar. I think I've got too many things open. Nope, all right. Daily buy near weekly support. So if I'm looking for things that pull back, there's that Ventus again. All right. I liked Vulcan a lot, but before you type in earnings this week, it's got earnings this week. Notice what it says in this column, earnings due date. They're not always 100% correct, but they are most of the time. Boy, if I have a higher resolution, I don't have to be playing around finding my charts. But if exiting, Steve, great question. I will cover it in a few minutes because I actually think that's a very important question. And I'll show you Jeffrey's approach. Everybody has their own approach. I liked Vulcan's chart a lot, okay? Here you have a stock that's clearly in a downtrend if you look over on the weekly side. Then you can see here a doji. And then you have here and here closes above that. This is a high closed doji. This is a reversal, okay? It's a big move from the top of the doji bar, but that's a reversal. Here is an uptrend sideways move, pull back into the major indexes, and then a buy signal. I like this chart a lot, and then I saw that it had its earnings. So there's a question, and I don't know the answer yet, but I'm going to look. I think it's up to John, because I could certainly get it done in the program. The question was, on the PMC, can we change the index? You can. You can change the PMC to be any market you want. Personally, I don't know what the others would do because I haven't played with it, but you can put it in to be an ETF, a stock, compare everything to Amazon, whatever you want, and your S&P 1500 is all over the place. So there's the answer, yes. Gary, on refining the filters, I want to get done with the content. We're already an hour and a half. That's something that we're going to do later in the week on our private sessions. I hate that word. On the smaller group sessions. All right. So I've showed you some of those. Let me show you what else we have built in. And we'll continue to improve. Daily buy with weekly buy. So we got 64. Why look at 8,900 charts when you can get it down? How about a trilogy buy? I'm not totally happy with this yet. I have to refine this, but I think I'll be able to get a good trilogy buy scan. New high closed dojis. So just a word, this behaves like Thinkorswim, and that when you run the scan, it considers the last chart, the last bar on the chart to be closed. So you could get an HCD and that goes away by the end of the week. I kind of like it because I know on Wednesday what stocks are setting up to be an HCD. How about my favorite scan? One of my favorites is HCD weekly, PPS buy occurring within, it should be B, but I forgot, 2 days. So these are stocks that have a high closed doji that within the last 2 days, that's on the weekly, the last 2 days, you have a person buy signal. Let's look at HD supply. For those that go on John's cruise, He's going to love this. He's not going to have to worry about internet access to look at charts. So, yeah, this thing sold off. So you have a high close dojis occurring here, 3 in a row. You got a weekly, you have a daily person buy signal, pocket pivot. All this is doing here, and I know my charts are dirty. It's just, it is what it is. That's what I like. But you can start with a clean chart and build your own. Or if you want to be an aficionado of John, you can go to John stuff. Everybody has their own preferences. And the beauty of this program is I could probably create anything in it, and we'll teach you how to do the same thing. Any questions about the program thus far that I've shown you? I had a question come up about exits. So I'm going to talk about that now. And all right, let's pretend. Go on my buy list for this week. Let me pick a stock and let's work it up. Let's work up IIPR. This is how I look at taking a trade. I started today by saying I work full-time. That wasn't a typo. I have 3,500 employees. Thank God I have very few direct reports. I have employees in 7 or 8 offices in the US, 3 in India, and 2 in the Philippines. If you think I have time to trade all day, I don't. Hence, I had to develop a trading system that worked for me. And combining John's stuff with HGSI did the trick. You already saw I make money. I don't need to go back to that slide. So I'm interested in IIPR. So I'm going to hit this thing right here, which is called the data window, and I'm going to pull it over here because this gives me all the information about the last price bar. My style of trading would be to say, if this closes above the high of that day. So that day, the high was 99.15, the close was 98.96. So I'm going to put a buy stop at a number. Let's say I'm going to put a buy stop here at $99.22. So based upon the way I do things, if this thing closes above $99 or trades above $99.22, I will get filled. I have 3 different stops that I'm going to put on this, all right? And this is a whole hour-long lecture in 3 minutes. I know, I didn't want to do that. Close that off for a second. Go back to this. I know that the high of this day was $99.15. I know I'm putting a buy stop in at $99.22. I know that I have a 200-day moving average sitting there in red. And my whole premise for buying this is that it's broken above this 200-day moving average. That 200-day moving average is at 91.68. $8 or $7.60. You know, it's about 8%. So I might, if I wanted to give it room, I might put a sell stop right about where that 200-day moving average is. All right, Jeff, will you stop? Hit the right one this time. Now, I have to think about it a little bit. Am I willing to risk that much? And of course, I'm talking and not paying attention to what I'm doing. If I hold the shift bar in and then take my finger off the arrow before the shift bar, I'll get a straight line. So I'm thinking I'm going to set my stop there. So my stop is at the 200-day moving average or right below it, which is 91. We'll make it 91.65. And again, this is not an optimal purchase. That stop is too far away, but I'm just going to live with it right now. Now I'm going to pull up my calculator. So I got 99.22 divided by, or minus 91.65 equals 757 into 99.22, a little bit less than 8%, 7.6%. I can live with that. So let me clear. Let me go back to that number, 99.22 minus 91.65. Let's say I'm willing to risk $5,000 per trade. That doesn't mean I'm going to buy 500 shares for 50,000. It means my risk on this trade is $7.50. So if I am willing to risk $5,000 and it's $7.50 per share risk, I can buy 660 shares. So I would take this trade. Let me do this, hold on a second. So I would buy 660. I'll round it down to 650. And I said I was going to buy it at $99.22, right? So I would go into my Thinkorswim, and this isn't the whole trading course. I'm not going to do it right now, but I would have gone into my Thinkorswim. I would have opened up this puppy here. And I would set a buy limit, and then I'd probably put something that set the buy if the price crosses this. So I would set up a conditional order. So stop number one, the way that I trade, is determined by looking at the chart. Now, O'Neill says sometimes 8%, 7%. This is more of a stop than I'd want, but I would take it. Now, if I'm buying it at $99.22 and I'm risking $7.57, then I want to get at least a 1-to-1 target. So I'm probably going to manage this position. The next thing I'm going to do is I'm going to put a order to sell half at whatever I just said the number would be. Come back, calculator. Bring the calculator up. 106.79. That is entered into a Thinkorswim conditional order. And then I'm going to raise stop to break even. All right, so at this point, for the person that asked the question, I've now raised my stop, so I shouldn't lose money except if there's a gap against me. I've taken profits and put it in the bank. And oh, by the way, I've now reduced my risk on this trade to 0, so I can let this position run and use that risk capital on another trade. Now, I will then monitor the stock. And let's say I did a good purchase. And let's just look at one that I know is, let's look at Shopify. And this is not something I learned from John, and John does different things. He uses the last conditional change. Here is called a chandelier stop. And I would typically run it, the chandelier stop up, and I would leave that second stop in place until I'm up another one time, so another $7.57. Now I'm up twice what my original risk was, and now I don't want to give up any of that, so I'm going to put a trailing stop on. You could use the last conditional change if you have it in your program. I use a chandelier stop, which is available in Thinkorswim. If not, I have the code for it. That's how I manage my stops. I do the same thing on everything until I get stupid. And, you know, I guess it's okay to admit stupidity. I have a number one position, not all in this account, obviously, that I have is Amazon. I bought Amazon because of a constellation of my signals that occurred when it was $454 a share. So that probably takes me back into the middle of 2015. In fact, if you can't tell, I like to talk. And the dangerous thing about having a webinar during the day is my wife's not giving me the dirty eye of it's time for me to shut up and let you go. So I could actually show you all kinds of cool stuff, but I don't have all day. Or you probably don't have all day. So let me find my Amazon trade. I talk about how I trade when I do the live meetings, just like everybody else does. I have no ego about what indicators people use. I use what works for me. You use what works for you. Amazon is what I call the Holy Grail. And I'm looking for specific signals. So I'm sitting here one day, I'm looking at Amazon. I know you can't see anything. I bought 40 calls and 40 puts. I bought 40 calls, I sold 40 puts. My net cost was $5.82. And fortunately for me, the rest is history because the next day or 2 days later, stock gapped up a ton. And I had a 1,290% return in 9 trading days. I ultimately converted those 40 calls into 4,000 shares of Amazon. I still have the majority of them. I use them to give away charity. So the ones I don't have been given as charitable gifts because you don't pay taxes on the step up. And what I've done on Amazon and what I do on my other big winners is I take my stops off. Now, I'm not recommending you take your stops off, but it comes a point in time in a stock where I'm willing to ride down a small loss in exchange for getting the big gains. And so I start with a stop based upon the chart. I get a 1 times risk move, and I move my stop to break even, and I take half of it off. The stock goes up another risk amount. I raise my stop we start all over. I start with a stop that's based upon the chart. When I go up 1 risk amount to P1, I take half off, I raise my stop to break even. When I go up the second P, so the next 757 on this stock, I'll then shift to a trailing stop, and I'll leave the trailing stock on as long as I can. When I'm up 40, 50% in a stock, and you're probably thinking, how often does that happen? A lot. I take the stops off and I manage them. Yes, the chandelier is built into HGSI. And you know why you want to become an HGSI member? Because sometimes you can actually make money off of what people like Ron and I tell you. And, you know, I've made a lot of money for people on trading Netflix in the first quarter. I've made a lot of money on stock picks. and probably the best pick I ever gave. I did had a educational session on April rather, of 2018 in Orange County. And this little stock called Tandem kept hitting my radar screen. This is a weekly, but on this week, I gave it as a buy signal. And I got into it on the next bar at about $6 a share. And I bought a shitload of this stock, and it's bought me a couple boats. Now, I took money off as we went. You can see the trail. I still have a piece left. It was a $6 stock. It's now at 85. So on that, I think I've covered most of the stuff I wanted. Let me bring you to the deal. I can tell my wife is back, and she's like going, "Are you done yet?" And so here is the deal. I am the messenger. I'm not the one that sets the prices. If you're an existing HGSI owner, you have to go to Person's Planet, and I'll show you where on the website in a second, and you have to order a subscription. I'm going to do 4 live webinars. One will start this week. I'll let people know probably tonight what day it will be. I'll do 4 of them to show you how to make the filters, answering one of the person's questions, how to customize, how the things that I do. I'll show you how you can bring some of that into TradeStation or Thinkorswim. John has agreed to do a course as well, at least one day, a masterclass. And the indicator and everything else, and I'll answer questions when I get done, is $727 for year 1. The price is significantly higher for year 2. It's less than the TradeStation indicator pack. And all I could say is I don't control the price. You'll decide after a year whether you see value. And I've talked with Mary a little bit about some of the comments about pricing. If you're not an HGSI owner, you got to buy HGSI. It is the rousing cost of $6.99 a year. And with my name, you get $100 off. You get $727 for John's indicator package. And so it comes out to $13.26 or $27 at the end of the day. The HGSI code is my name. A couple of comments that have turned up that I found out. If you're not an HGSI user, you're going to end up going to Person's Planet. Let's just type it in here. All right, what did I do wrong? Maybe it's not HTTPS. Let me just try it differently. That was funny. Hello. I know Mary had a certificate problem that was fixed. All right. It was working a while ago. I'll get this up. I had it up before. Somebody else had told me that they had an issue, and then Mary had said, all right. Oh my goodness gracious. Well, if this is true, then it will be fixed shortly. Oh my goodness, John and Mary, you're killing me. Yeah, I know they had a problem. She told me she fixed it. I know it works because people have been doing it. So high growth stock, let me show you the HGSI side, and then I'll try going in with a different browser because maybe that will help. High growth stock, highgrowthstock.com. Tell you the beauty about days like this is I've already done all my market work. I've got nothing to do tonight. This is, to me, much more fun than doing them on a nighttime when I have to rush. All right, and I do have fast internet. I don't know what's going on with the internet. So here it is. All right, free 30-day trial. So for you newbies, you can hit free 30-day trial. You are going to fill this out. They're not even going to ask you for a credit card. But if you stay with it, and believe me, if you buy the indicator, you might as well go the next day and convert it to real. But if you stay with it before the 30 days are up, you go back and you convert it to be a full user, and then you use, all right, my code of my name, which, come on. Oh, there it is. Too many computers. Then you use my code with my name, Jeff Scott with the J capitalized and the S capitalized, and that will get you the $100 off. So let me pull up the other browser, and here I was in. So just a word, if you go to personplanet.com, I'll go back one. All right, so here's your basic entrance. If you see the indicators are available for a number of platforms. If you look, for example, at TradeStation, you've got some videos, folks who've been talking about the price. You can see the price. You see the prices. We actually got a pretty good deal in HGSI. I know for a lot of you, there was sticker shock. You go to the HGSI platform, order now, and then it's $727. Mary has told me that there's no extra, and I agree, on the introductory price, there's no extra discount based upon prior purchases. But as you go forward, she's going to have a discount on renewals. The $727 is an introductory price. I'm not sure how long it's going to stay. And I've had some discussions with her about the regular price, and we're evaluating that, which is significantly higher. The other thing is, I know some of my friends were concerned because it looks like you're locking yourself in forever. The folks that came from John's world know that John and Mary are very nice, genuine people. They're not trapping you once you sign up. Yes, it's just for the first year on the discount it's a new user only thing. But once you sign up on Mary's site, John's site, you can turn off, you can cancel the auto renewal. So that's easy to do. A couple other questions I have. Seasonality. I love seasonality. I've spent a ton of money on seasonality. I paid for my seasonality with one stock every year, and that's Netflix. So everything's smushed. So don't laugh at my charts. I couldn't use those charts either. There is a company out there. I have no relationship except I've talked with a proprietor, and if I can get probably 10 people from HGSI land who are interested, we can get a deal. You can get a deal. I've already paid full price. SeasonalTraderPro.com. Don't get heart attacks. So this is a guy named Dr. K, Dr. Keith. He's got two seasonal tools that I use on a regular basis. And I'm going to show them to you in Thinkorswim right now. Here in white, and it came in several weeks ago, this is a weekly chart on the right, his tool projected what the price on, in this case, EVRI was going to do. Obviously, that's very bullish looking. In blue, he's showing you how close it's gone to his projections and where he is now projecting the stock to go. If you look, whatever stock you want to look at, as long as it has 12 years of data, you're going to get painting on a weekly chart in HGSI seasonal projections, which appear to be very similar to what we see in Best Choice, Seasonality Trader, and Magenta Trader. Each of those products are still there. They all have their pros and cons, but here you can actually have it painted on your Thinkorswim platform. It's expensive, and so are the other programs. That's all I'll say. It's a one-time purchase, and he does have sales. The other thing that I do with him is, don't tell John how many holdings I have. But remember my comment, and this isn't my holding. I don't have all, yeah, I do have these. When a stock no longer has risk in it for me. I don't count it against my risk portfolio. Well, I've had a lot of these stocks a long time. One of my favorite, and they're different portfolios. One of my favorite Thinkorswim indicators is column week to date. And you could see last week I had some losers, and the big one being CyberArk after earnings. And I had some really big winners, 21% on Novavax, 15 on Tandem, 14 on Alteryx, 11 on AMD, 11 on Shopify, 10.5 on DT, and then all these others. But over here is this thing called the Dr. K signal. So on the charting module, and George, get your math out, see how you can do this. Although I shouldn't say that because I'm now getting friends with Dr. K. Whatever stock you want to look at, you're going to see, if there's 12 years, you're going to see the picture of seasonality, okay? But that's only one stock at a time. If I do a market watch, if I do it as a gadget, if I do it as a scan, what I can do is I could put in the Dr. K signal. Any stock that meets the following criteria has at least 12 years of data and at either 20 days, 40 days, or 60 days has at least an 8% move, will make it to this list. So these are the stocks that have great seasonality. Hard to buy that one. Bank of America, that's interesting. Stodgy old devil. So it's got some short-term seasonality over the next few weeks. So what he's done is he's combined a charting indicator. Again, this is a weekly chart, all right? So this is not to March. So this is several weeks of a move. But more importantly, he's got a radar screen indicator. I think George could figure out how to do that in HGSI, but it would just get added to the list. Any other questions? I know you're getting tired of me, although there's still a lot of you here for some reason. The HGSI board got a little bit furry for a while. We had some adult conversation. People did not get too personal, which was good. The Facebook page had a little bit of interaction after my last call. But the funny thing is, most of the ones that were perceived as negative have bought the package. You might ask, why am I doing this? Well, the selfish reason is I'm sitting there during the day going between HGSI and TradeStation because I don't have the person stuff in HGSI. Selfish reason is I want to do it for me. The unselfish reason is I'm friends with both John and Mary and George from HGSI, and I'd like to see HGSI get exposed to more users. And I'd like my HGSI users to get exposed to John because I think there's value. A question came in, when do I buy calls versus buying the stock? Oy, we could spend a week on that one. Do I want to? I don't want to. I was going to show you. So let me tell you how I enter positions. Again, this is Jeff Scott. This works for me, but it doesn't have to work for you. I like big positions to enter. So typically, I'd rather buy options than buy stocks. I also know from a top-down chart, which I didn't do a good job explaining, so let me go back to it right now, because it explains my madness. This is a really important story. Back, and I was only involved in maybe 2 of the meetings, Ian had a series of meetings every month near his home in Palos Verdes Estates, California. At those meetings, he had Mike Scott, Robert Minkowski, I think, went to some, but some very astute and smart traders. And every month they came up with a list of buys. They had a secretary whose job was to keep track of those buys. And then in hindsight, as I understand it, they would go back at the end of the year and assign for the month, was it a strong market? Was it a weak market? Or was it a mixed market? And then the secretary would basically keep tabs on what they purchased. So what you see in this chart is when you had very good stock pickers, what they were in a strong market, they could double their money in 20 days or 1 month. But in a weak market, those same stock pickers sucked. Now, were they just having a bad day? No. What it's telling you is the market matters. That's why I spend so much time on the market, the market, the market. Now, the other message here is if you get a big win, take some off the top because they go backwards the next month, which is why I take half off very quickly and raise my stops. The third thing it says is, if the market's only a little bit weak, maybe it will come back, but how do you know it's only a little bit weak? And in a weak market, think 2007, 2008, it just got worse. That dictates what I do. So if I want to enter something, if it's less than $10, $12, I buy stock. I can buy a whole lot of stock. I don't need to buy options. If it's over the $400 a share, I guarantee you I'm buying calls, not stock. In between, I'm going to look at it. Now, again, I still got 50 people. All right. I have my toys. Let me shut some windows because if I don't shut windows, I'm going to shut the computer down and lose you all. And this happens, I got a lot running here. It's a razor. I use it only for projecting stuff because it's a full HD. I use 4K on all my other screens. I'd rather do these in 4K, but I find I leave people behind. And when I leave people behind, they can't see anything. And that's not fair to them. Plus, it's a bandwidth story. So here's what I do. Let's say we're looking at Sabra tomorrow. That was cheap. Let's look at IIPR. IIPR pays a dividend, so I'm already leaning towards buying stock. Let's look at IIPR. Yes, this is another program. You don't need to buy it, so don't worry about it. So IIPR is about 98, 96. And just looking at the stock, if I was to buy it, I'm probably going to figure out that it's not going to go any lower than where that $90.74. That's a long ways away for me to put a my stop. But let me just put a 50-day on it. $50 is way too long. So I'm willing to go to the lowest of the last 4 days. So it's going to be somewhere a little bit about 90.50. I'm risking a lot of money on that trade. So I might put my stop there. My dog's giving me the look. So I think he just had an accident because he gets mad. So now I'm going to go here, and I do this in my mind, but I'm going to show you what I do. I run a spread analysis, okay? I'm bullish, so I'm going to look long stock, long call, short put, bull call, put, synthetic long. So these are the various bull positions. I usually go out 6 weeks, so March is a little close, so maybe I'm going to go out April. My initial strike price will be at the money. The price is 90, that's Axosome. So I want to change those to IIPR. There's method to my madness, so I promise I will have a story for you, and then I'm going to go take my dog for a walk. So this tells me the various call spreads that I could do. Oh, this is Axosome still. I don't want that one. I want Here it is. That's the chart. Don't want that. Do another spread. Here it is. So, and I wanted to go to April. Let me go to April. I have to rebuild this again because I lost it. But you saw how long it took me to build it. So these are the various spreads that I might consider. Okay. And I get my BDIs over here. My highest return of investment is to do a bull call spread. I don't like bull call spreads because I've limited where I can go. But if I want a high probability trade, the most I can lose is the delta between the two strike prices. But what I want to find is there a trade that I have infinite profits and risk that I could deal with? And I come down to one of two, a long call, one of three, a long stock, or a synthetic long stock. So I want to show you how I think about this. So this is a spread here. And let's make this spread, actually, let me close these and rebuild it. Long stock, synthetic. So if I buy the stock, the blue curve is my P&L. As the stock price goes up, I make more money. As the stock goes down, I lose money. I've got to spend $9,896 to buy 100 shares. My risk is $9,896. I make profits the first penny it moves in the right direction, and I got infinite gains. I don't mind buying stocks. That's not what we're talking about here. How about buying a call? This will be the last part of my discussion for today. If I buy a call, then compare that to the stock. I buy a call. I only got to pay $650 for 100 shares. If I was willing to lose $8 on the trade, this is going to be less risk than buying the stock. I've got infinite gains, but there's two problems with this. One is it's got to move $106 in my favor to get break even. And I got to pay out of my pocket money to get that. It has some downside risk. I can lose that whole premium, which is $650. And again, it has to move $106 in my favor to break even or make money. I can fix both those problems. I can do a synthetic long. Think about that Amazon trade. And before you get this guy's nuts, let me show you how I protect myself. I love synthetic stocks because this P&L is identical to buying the stock. I get paid $235 to control 100 shares versus $650 on the calls versus $98.96 on the stock. Now, but Jeff, you could say, this is so risky, you're frickin' crazy. And my answer to you is, it's the identical risk as owning the stock. Just don't be stupid and say, since I get paid for buying it, I might as well buy more. Buy the same position size. Now, I don't have to move a penny to make money. I'm profitable on the first dollar. All right. If there's lots of implied volatility in the option, if there's lots of extrinsic value in the option, I mitigated it because I bought one and sold one at the same strike price. I like that. But let me tell you how you can sleep at night. What you do is you don't do that trade. I do that trade, but you don't have to do that trade. Let's buy an option. Let's buy a put. And let's buy a put at, say, $90. April 17th, 90 put, midway priced. So Did I do that wrong? I have too many of them. Hold on a second. Let me edit the spread. I want to, yeah, that would have been a very, all right, so that's called, okay. So here is the Jeffrey synthetic, also known as the chicken synthetic, also known as a synthetic call. For $190, I am buying the upside on 100 shares. That's $500 less than buying the call. It is $9,700 less than buying the stock. I have capped my losses just like buying a call. Instead of paying $600 here, I am risking $500 more on the back end. It's worth it to me. This is the trade that I take all day, every day, on the vast majority of positions I enter. I look at 1 or 2 strike prices away to look at what the costs are. And then what I'll do is say, this position here, short put, long put, it's a debit put spread, excuse me, a credit put spread. I'm getting $4.60 for taking that, for selling that put spread. So I'm getting $4.60 and I'm risking 10. As Gary pointed out, I don't have to move a lot to make money. And then the best part is when this gets down to less than $1, I cover it. And then I'm just in the money on my long call. That's how I trade. Can I do back ratio spreads in this program? Sure you can. And there's all kinds of comparators of looking at different spreads. So I think I've covered most of the things. I want to emphasize again that the free trial are to new, the discount coupon and free trial are to new subscribers. You only get to use it once. If you like the gobbledygook that I went through, then join HGSI, go to my webinars, and look to an invite potentially to a meeting in June, July. On that note, I'm going to say goodbye and thank you all for coming. Let me stop the video, and this will be posted on YouTube and will also be put on the HGSI blog. And if I have your email address from another reason, you may get an email set. Thanks, everybody.